Welcome to We Chat Divorce, hosted by Karen Shalhoub, Legal Liaison, and Catherine Shanahan, CDFA. Each episode, we sit down with divorce professionals and industry experts to provide insights and frank discussions about real people, real situations, and real divorce to help you achieve your best life post-divorce. This episode of We Chat Divorce is brought to you by My Divorce Solution, offering divorce financial planning so clients can secure the divorce settlement they deserve. Visit mydivorcesolution.com to request access.
Hello, everyone, and welcome back to We Chat Divorce, where we break down the messy, emotional, and often confusing parts of divorce and help you make smarter, informed decisions every step of the way. I'm Karen Shalhoub, Legal Liaison and co-founder of My Divorce Solution.
And I'm Catherine Shanahan, Divorce Financial Specialist, CDFA, and co-founder of My Divorce Solution. We're here to give you the clarity you need so you can take control of your divorce, especially when it comes to your money and your future.
Today's topic is one we've been seeing come up more and more often. And as a matter of fact, is probably the top topic of most divorcing couples. Dividing real estate in divorce, when to do it, how to protect yourself, and why feeling protected is not the same as being protected. Let me just say that again. Why feeling protected is not the same as being protected.
Yeah, that's really important. We're going to walk through a real life scenario where a client wanted to purchase a second home during his divorce. He planned to use money from his 401k or even his life insurance cash value. And while he felt protected by a special clause his realtor added to the contract, the real story is a lot more complicated and actually really wasn't protection.
So if you're separated and thinking about buying property before your divorce is finalized, or if you're in the midst of the divorce and you and your spouse are already making decisions about that real estate, or if you're just trying to figure out what's yours and what might still be considered marital, this conversation is for you.
We'll cover what to watch out for, who to talk to before you make any financial moves, and how our financial portrait can help you feel more confident when making decisions without surprises later on.
So let's dive in and talk about what you really need to know before agreeing to or signing anything.
Yeah, Karen, there was an interesting scenario with a client last week. So I really would like to start with breaking down really at the most basic level. Like, what is the difference between being on a deed and being on the mortgage?
I can totally break that down. And that is the perfect place to start, because this ownership and obligation is one of the primary issues that you need to know when you're divorcing. And let's talk about why this matters financially. So when someone buys a home with financing, there's usually and are always 3 separate documents involved. Most people refer to all of those 3 documents as the mortgage, or sometimes they refer to it as a deed. However, each document serves a different purpose, and understanding the difference helps you evaluate financial exposure. Just want to make sure we all know this is not legal advice, it's financial awareness, but it's very important that you know these things. Because before you negotiate anything involving a home or any real estate, you should understand what you're signing. Typically, the title company and or your real estate attorney can also explain this to you when you're at the signing table. The first document is called the Promissory Note. This is your promise to pay. The note is the document where you agree to repay the loan to the lender. It's a relationship between you and the lender. It outlines loan amount, interest rate, payment terms, what happens if payments stop. So what does this mean to you financially? If your name is on the note, you personally have agreed to be responsible for that debt. So from a financial standpoint, this means your credit can be affected by missed payments. The lender may still look to you for payment no matter what other negotiations you have, and or if you've indemnified anything. And your borrowing capacity may be impacted while the loan remains in your name. Even if you move out, your spouse keeps the home, your divorce agreement says your spouse will handle the payments. A divorce agreement may allocate responsibility between the spouses, but it does not automatically change your agreement with the lender. If payments are missed, your financial recourse may involve enforcing a divorce agreement, which can mean additional time, stress, and expense. So the financial question comes, is your name still tied to a debt you no longer control?
So can I hop in here? Because that's a lot of information,
It is.
right? And, especially this time, because we saw the boom in real estate, we saw the increase of interest rates. So it's become more difficult to handle that in divorce, because to move out of your home, you're renting someplace that is more expensive than your mortgage payment. So people are becoming more creative, and it can work as if you have a clear understanding. So just giving me for an example, in my divorce, I stayed on the mortgage of the home. I really didn't have a fear that he wouldn't pay the mortgage itself. And when I purchased my own home, the new lender did have to see my divorce agreement and see that my spouse was responsible for everything, but it made it much more difficult. I mean, he wasn't looking to buy another home, so he didn't care that credit was in his name. But I just happened to luck out, basically, right? Because we had other issues that came up, and that could have been a huge problem.
Yeah, it could have definitely impacted your borrowing power. So let's go into the next document, and that's the mortgage or deed of trust. A lot of people believe a deed of trust is the same as a deed of ownership, two different things. So some states call it a mortgage, some states call it a deed of trust. And the difference is a deed of trust typically has a third-party trustee that are just part of the state requirements. From a financial standpoint, the mortgage is the security instrument that ties the property to the debt. This is what gets recorded at the courthouse. It protects the lender. It does not determine ownership, and it does not determine marital classification. So the financial consideration is, if the note is not paid, what happens to the property, and how does that impact your equity and credit? So as you were saying, with the pandemic, so many people had that amazing interest rate, and it gets very interesting to help couples model division scenarios when a party wants to keep that great interest rate. So how does that play through those documents that one or both parties have signed? The third document is the deed, and this is the ownership document. The deed determines who legally owns the property. It does not determine who owes the loan. And sometimes that's different. Sometimes we find parents on the deeds. We find a variety of trust involved. Sometimes we find other guarantors or parties. And so it's really important that you know who owns the property. So what you should know is you can be on the note, but not on the deed. You can be on the deed, but not on the note, on both, or believe you own or a named owner on the home simply because you live there or make payments. So what you need to know is ownership affects equity rights. It affects negotiation leverage. It affects how proceeds are distributed, and it may impact how property is characterized in divorce.
Let's talk about a little example here, Karen. So, do you recall the case where the husband participated, the wife was the client, and she didn't really want the divorce and thought that he was going to take care of her post divorce? That was her thinking until the end, right? And we pulled that information and found out that her mom was actually a half owner of the home. She was either half or third owner of the home. I don't recall exactly.
She was a half owner, but they thought she was a third owner.
Okay. And so client was saying, "Oh, my spouse, he won't mind. It's okay." And you proceeded to work with her and say, "This is something that should be corrected before you sign your divorce agreement." And it took a lot of conversation to get her to actually do that beforehand. And she was thankful, because husband changed his tune when we were helping her negotiate with him about the ownership of that home. He believed that it was just their property, and it didn't matter that her mom was actually on the deed. And I'm not sure if she was on the mortgage as well, but she was so thankful that we had this conversation and she cleared that up, because they would have ended up back in the courtroom.
Yeah, I think a lot of people don't realize that these little details that really a lot of people don't even want to consider, because you just want to, in the spirit of being amicable, you believe the details are less important. And that's exactly what happened in this case. So a part of our process is just supporting what you believe is true relative to the ownership of your assets. So we pull the deed. There was a will involved, that the will had left the real property to the mom and the daughter and husband, and they truly thought that each of them owned a third. The deed itself didn't even reconcile with the will. And so they did have to get a real estate attorney involved to correct all of that before they could then move on to divide the property in the divorce. And then there were also further complications. You probably remember where they had put extensive renovations into the home based on what they thought their ownership interest was. A very interesting case.
Yeah, and it really was. And I also want to bring up the deed of trust. I'm glad that you went over what that is because a lot of people don't understand the differences. A client last week was a little hesitant of signing an agreement, a creative agreement about real estate, but she was feeling more confident because she said, I'm not on the mortgage. I'm okay with that. And then after review with you, she actually was on the mortgage and she gave us the document. I mean, so it wasn't anything that we had that she didn't know, or did we pull the document? I'm not sure. But
Yeah, we do.
oh, we pulled the
Yeah,
document.
most people don't know how to pull those documents for themselves, and they frankly don't know where they put them after they acquired the real estate.
Exactly. So she was shocked and so thankful that we pointed that out to her, which will now just take a little bit more of legwork for her to be confident to sign this agreement. But the realization, she just said, wow, I would have never known that, nor would I have known the difference to that because her name was not actually on the mortgage statement. So she felt like that supported her or confirmed to her that she was not a part of the mortgage.
How often do we see that, Catherine? It's so often. Yeah, even on tax documents, they may name the primary borrower, but it doesn't. And sometimes a spouse is on the mortgage just as a guarantor, not necessarily as a borrower. So there's so many variables there that you really should know about. And family law attorneys, I've never seen one make it their practice to pull these documents because they're not real estate attorneys. That's not their job. Their job is to get you divorced. So they take people's word for things, and then clearly complications happen.
Well, I'm a CDFA. CDFAs do not pull this in either. That's just not our wheelhouse. And why would we pull that? We have no interest in that. But in divorce, it's really important to know the overall agreement that you're making and compromises and protections that you need. Can you talk a little bit about the client who had that HELOC that was in default for 20 years?
Yeah. So this is a case where it seemed pretty straightforward. There were two homes. Each party was going to retain a home. So it's just part of our natural process. We pull the supporting documents and look at them in case they need to go back to their family law attorney or their real estate attorney to ask questions. And we found a home equity line of credit. That's what a HELOC is. That looked like no one was paying it. And our client said, well, we don't make payments on that. I said, well, you need to ask someone if this is a live loan. I mean, I can't say that because I'm not an attorney, but all of the legal liaisons here can certainly say, this is a question you need to address with someone before we can move forward. And it turns out that the loan had been taken out 20 years prior and never paid on because the spouse believed that the lender did not record the loan adequately. They took the money, they used the money, but they never paid on the loan. And spouse, who never managed the books, had zero idea about it. So we had to get a real estate attorney involved. And well, first of all, we had to insist with the family law attorneys that this was a real issue. And then they decided to go ahead and get the real estate attorney involved without, making it known or creating a situation that the lender could create a foreclosure action. It was very fragile there for a while, but they got a real estate attorney involved who then was able to negotiate it down to at least a finite number that they could resolve and then move on to divide the property so that if she was left with selling the property, she would not have had all of that expense. of dealing with that lien on the property. And it was a live lien.
Well, you were hired as a legal liaison in this case, which is another service in addition to our portrait. And I bring that up because not only did you bring it up to the attorney, you had to be persistent with the attorney and just continually bring this issue up. As a matter of fact, in talking to this client last week, it came up again, and now client is thinking of selling the home, which or letting husband buy her out of that property. And part of that conversation was great. Then let him deal with this HELOC this situation because she thought he was. I mean, this is a 40-year marriage, so she always trusted that he was doing what he said he was doing. But sometimes it's better to walk away from that home and sell it during your marriage so you are not stuck with something that might arise.
Right. And I'm going to make a point here that when we have these conversations with the attorneys or we educate the client to have conversations with the attorneys, they will say, we'll take care of this in the marital settlement agreement that, both of you will work to make sure this is resolved. Now, really, how's that going to work? After someone's divorced, who's going to be motivated to work out a lien on a property that they no longer own? The other term
No,
is
I'm a betting woman, and no one will agree.
You could probably play the lottery on that bet. And the next one is everybody or family law attorneys or all attorneys. This is just a legal word. They'll say, well, one spouse can indemnify the other. And that's especially if, someone defaults on a loan and they're retaining it, things like that. And so people feel they're protected, right? Oh, that's my protection. Your protection is that it's in the settlement agreement, but the way you get it enforced is to go back to litigation. It's not an automatic. The lender can still come after you. And if your spouse doesn't stick with the terms of the agreement, you have to go back and enforce that. So indemnification isn't as amazing as it may sound.
I totally agree. Okay, so this is some key financial awareness moments. Before making any real estate decisions in divorce, selling, refinancing, buying something new, or walking away, you must consider some of these questions. Am I personally liable for this debt? Do I legally own this property? How much of this property is marital? Do I have control over the payments to that debt? Is my credit exposed? Is my equity protected? If you do not know the answers to those questions, the next step isn't signing something, it's gathering the documents and getting informed. We tell our clients all the time, look, we don't give legal advice. We give you really good questions and the documents to be reviewed so you can get the best legal advice. None of these situations above that we discussed about have been identified by the family law attorneys. That's not their job. It's about understanding your financial exposure before making irreversible decisions.
So let's layer on the next critical piece in real estate. Just because we've established here, are you on the ownership documents? Are you on the obligation documents? Now, the next piece is just because your name is or isn't on a document doesn't automatically mean the property is separate or marital. So if you don't know who legally owns the property and who is legally responsible for the debt, you are making decisions in the dark. And then you can make the decision about what is marital and what is separate.
So we could talk a little bit about marital versus separate property, again, without giving any legal advice. Marital property is generally acquired during the marriage. Separate property is generally owned before the marriage. It's inherited or it's gifted to you individually, excuse me. Appreciation of separate property can become marital if marital funds were used, or if you actively aided to the growth of some separate property in some states. Buying a home during the divorce can be a sticky situation, right? Because what monies are you using to fund that property? Do you have an agreement with your spouse that this would be separate property? Some people get really anxious. A client of ours that we mentioned a little earlier ago, he was really excited. He was moving on. He finally felt like, okay, there will be a good life post-divorce. He found a home in another state where he could golf and got really excited about this. And he wanted to use some of his retirement money. The problem was his divorce was not final. So you still don't know what your overall agreement is. And this is also the spouse that the realtor gave him a clause, Karen.
I saw it.
And he felt so protected, and he asked you to look at it like, am I protected? So you want to elaborate a little bit more on that clause and how it couldn't really protect him?
Yeah, I don't exactly remember the specifics of the clause, but it seemed like the realtor was inserting something about the divorce, and the client believed it was true. And I said, well, you need to verify this with your attorney, because you need to know your realtor may be putting clauses in, but they don't know the legal impact to you. They're just writing something in from a realtor's perspective because they need this sale to go through. And
I think the clause, not to interrupt you, but
yeah,
the clause just came back to me. I think the realtor wrote something like, you can back out of this deal and get your deposit back if you incur any penalties. Like, it wasn't a full wording, like, if if you have any fees or anything. They put like this generic clause in there that didn't encompass everything that could happen.
yeah. So it probably protected him relative to the realtors, buyer and seller, but it didn't provide that protection regarding the divorce terms.
Or the
So,
asset itself,
yeah,
right?
yeah, exactly. So that's where you have to really be careful, and we run into reading a lot of listing agreements and sale agreements where the realtors have written clauses in and the buyers or sellers feel protected. But when you have a divorce pending, it's something very different. And then in addition, every state is different about, well, what are marital funds during the pendency of a divorce, right? Are they marital if you've separated, or is it at the date of divorce? There's all kind of nuances in that space that need to be clarified. So you're assured that the transaction that you're making is marital or separate, and whatever you would intend that to be. And many times, I'm going to say most of the time, when you're buying or selling real estate during a divorce, you need to have some sort of stipulation or agreement relative to that transaction.
I'm just sitting here thinking about so many cases where this has happened. Not his case in particular, but where you get really anxious to go buy a new property and you think that's the answer to your sadness, and it really is not the answer to your sadness.
Yeah.
So let's talk a little bit about commingling. People do commingle. They mix marital and separate funds. You should be aware of when that might occur. Using joint money to improve a separately owned property could commingle that property. Um, Also, equitable distribution or community property is not necessarily 50-50. So you've got to check your state laws about that, and make sure that you're clear. And I like that you brought up, have an agreement in place before you buy any other property.
That's really the point. If you don't know who legally owns the property and who is legally responsible for the debt, you're making decisions in the dark.
And divorce is not the place to make decisions in the dark. The house is often one of the largest assets in a marriage. It impacts your credit, your borrowing power, your retirement, your cash flow, and even your leverage in negotiations.
So before you sell any real estate, refinance it, buy something new, or agree to keep it, you have to understand the foundation. Who owns it? What is owed on it? And where your liability truly lives.
In part 2 of this conversation, we're going to move beyond the documents and talk about what actually happens when people start making real estate decisions during divorce. Buying new homes, selling too quickly, hidden liens, escrow mistakes, and why indemnification is not the safety net people think it is.
Because real estate decisions in divorce aren't just emotional or legal decisions, they're financial risk decisions, and clarity is what protects you.
Thanks for listening. We'll see you in part 2.
Thanks for joining us on another episode of We Chat Divorce. We hope this episode was informative and supportive on your divorce journey. If you're looking for more support for navigating divorce with confidence and clarity, head over to mydivorcesolution.com for more podcast episodes, divorce events, and resources for your divorce. We'll see you back here for our next episode.